All right, all right, all right.
Here comes the money.
Here we go. Money talk.
Here comes the money. Money, 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 money.
Dollar, dollar. Dollar.
All right, all right, all right. It's another night, and here we are. And I see a little bit of green in sight, so it's okay. It's good. It's good. Welcome back, or welcome if this is your first time stopping by. I just want to thank you all for stopping by. We'll take a little look-see at the charts tonight, see what's going on, see where the opportunities may lie, and go forward. So here we go. First things first, I got a 5-minute chart up. Oh, I'm sorry, I have the 30-minute up. Maybe I'll just go with the 30-minute tonight. It's a little bit slower, a little more peaceful, not demanding of you to make decisions rapidly. But what we got? We got a squeeze today, I think. I think this is a short squeeze because it just took off for the moon. Of course, it could be the news also that President Trump was taking the squeeze off himself a little bit and giving some breathing room. So whichever way it goes, the market shot up like a rocket. But like I think I said last night, too much too soon. Not enough structure here. It's not going to hold it up. It's going to come back down. Where does it come back down to? Well, potentially it's got to retest the 233 exponential moving average. So as this tends to creep up higher and price comes down, we'll see if it holds. If it holds, then things go higher. I also added on tonight, I referred to it last night, I believe, but I added on the anchor momentum. So we can kind of do technical analysis with EMAs and Fibonacci's up here. There's some Fibonacci's up here. So all the way around. And then there's volume profile, which maybe at the end I'll add in. But I'll see how we do in terms of time. I think I ran a little bit long yesterday, and maybe that's not something that's really a good thing to do. But I had a lot to say, I guess. So I'm going to try and say less today and hopefully convey more. And that way you can get a good sense of what I'm thinking. And like I said, please feel free to comment because I would certainly enjoy receiving feedback from anybody who cared to offer it. You know, I mean, that definitely helps. Otherwise, I'm operating in a vacuum. I don't know what's going on, so I just go on my own instincts, which I think are pretty good. But I definitely would enjoy having feedback from other people who actually watch this and tell me, hey, what about this, that, or the other thing? Hey, you should be doing this instead of that. I mean, constructive criticism, feedback, whatever you want to call it, it's all good. It's all good. So here we go. So we have the 233 EMA, red coming down, and price underneath it coming down. Yesterday we had the move up to the 233, but it failed, and back down it came. Today started off chopping to the upside. We had a low here. What do we have here? What we talked about last night. Higher low. Higher low, and off you go. What do we also have? We have the fibs up here. We actually have a fib here, the 261.8. And we have a 200 up here, longer term. But what did I do? I said last night, I think, that I would show how I draw for fibs, the Fibonacci extensions. Well, I figured tonight would be a good example for that because we have some price action that lends itself towards drawing fibs. I start off at the bottom here, and this is actually the higher low. This would be the bottom. You can possibly go from there if you wanted to. That would be the swing low, but I'm using this as a swing low. Then I draw to the high here. And what is it? It's a swing high. It's not the high, but it's a swing high. And then I come down to another swing low down here. So it goes from low to high to low and projects or extends the Fibonacci's up here. That's what these Fibonacci's are up here. It's as a result of this right here being extended up, and then the coefficients, the percentages are drawn. And interestingly enough, based upon drawing that Fibonacci extension, what did it do? It hit initial resistance on the confluence of the 200 long term and the short term that we just drew, the 127.2. That's where it kind of slowed down. It was rocketing upwards. Then all of a sudden, what did it do? Came down to a higher low, and off you go. But with the confluence here and the overhead resistance, this doesn't really do that much more. Did reach up to the 1414 or the 141.4, whatever you want to call it. And that capped it off, interestingly enough. And it started a retrace now. Now these are half-hour candles, so with half-hour candles, it's going to take longer for the stuff to materialize. And you may feel the pressure, or not pressure, you may just feel like you want to do something where you're getting more information in a quicker format. I decided to kick back the other way. I tend to hang on the 5-minute, and it doesn't always serve me well. I'm trying out the 30-minute, and we'll see how it works out. But anyway, come back down to what? The confluence again. So it might find support here and move higher. Or because of the incredible run, it might bounce in this range here and consolidate. Or just break the lower 200 bound here and finally come back and clean up the touchback on the 233. It turned green, it's headed up. Now the anchor momentum with that big bar here, whether it was the news or it was a squeeze or a squeeze as a result of the news, boom, the thing just took off, practically straight up. But the momentum started waning just a little bit towards the top here, and then you got the higher low. And what did it do? It's showing you the higher low here. This is a higher low to here. So you got a higher low, then price continues upward, and interestingly enough, the red line showing divergence. This is a little bit lower than here, so you got a high, you got a lower high here. Lower high, there's that ominous word again, or ominous phrase. And up here, you got high and you're going higher. So the anchor momentum is a great tool. I would totally advise it. If you feel like you can incorporate it into your charts, that's what you got to do. And let's see. So then with the divergence, the red line crossed under the green line, which is the first warning that things are starting to peter out. And then the red line comes down and the green line follows suit pretty hastily. So down it comes. Not near as much as it went up, but that's okay. Down it comes and you see what happens. You just kind of sit back. And with a 30-minute candle, you got plenty of time to do so. I got quite a few other things on my plate right now, so I'm basically juggling a little bit. And I'm just kicking it back a little bit from 5 to 30. And we'll see how it goes. So that is pretty much that. And that's MNQ on a 5-day 30 chart. And what do we want to look at? Well, look at, well, let's see if this extends down. The long-term fib, does it extend down somewhere below here where we're not seeing it and giving us a bottom side projection? Way, 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 way down. So that's down at almost 15,000. And we're back over 19. So the likelihood of it hitting 15, not anytime real soon. I mean, it's showing, price is showing us that it's moving generally to the upside. And with this move bursting out over the 233, and it's green once again, that bodes well for it, I think. It's just got to build structure. It's got to backfill this move. And that's what the volume profile will show. It'll show volume basically being light for this move. And light volume doesn't help you build a base to move up from. So you have to backfill it. You gotta back up. You gotta come down a little bit, and you see where you go. Okay, so that's that. And I'll go up, and we'll turn on the volume profile. And you got a lot more color on the charts all of a sudden. The blue, obviously, is the volume. And it's volume by price, as opposed to having the volume down here, which I don't have on here. I'll probably add at some point, maybe. But that will be volume by time. So, what else? Here's what I was talking about. Low volume. I mean, it just shot up. Like, ba-boom. And basically doesn't have anything. So it's almost like this is the base down here. This is structure, okay? And it's like a foundation. And it's like this block, this building is being built on top of it on a very thin support. And at some time, this could just fall over because it doesn't have enough strength to hold it up. And based upon how much time price stays up in this area, and builds more and more on the volume profile up here to have this gap here, which isn't represented as a gap here. It's a full price. But anyway, the point I'm trying to make is this needs structure. And if it comes down, it'll start filling in structure down here so that it's more substantial. So that's pretty much what I'm thinking. And let's go to style. And let's just, no, not style. Excuse me. Let's go to the profile. And let's go to show volume histogram and say no. Okay. Apply. Okay. So we take the volume histogram out of the equation for a moment, because what I really like to look at is support and resistance. And that's what the low value node, the yellow line here, and the high value node, the yellow line up here, is really showing, is resistance. And then you have the point of control, which ends up being like a magnet. It's the place where most of the volume transpired. It's kind of like a VWAP. Not really, but it's got the same magnetic kind of personality to it. So there's that. But what else about this chart? Or about the volume profile? We should have the projections off of the, and we do. I just got to make sure that I'm seeing them. Down here, the cyan line is actually the same as the lower value node, the lower value area line. It's just projected outward into the next time frame or the next day. And the same goes for the point of control. You have the point of control on this day. It extends out into the next day in magenta. So you just get a sense. You got cyan, you got magenta. But then you also have this period's lower value node. And where is it? It's up here in the mix. Is the point of control. And then you have the high value node. So you have a series of lines. And what you're not showing here, and what I would prefer to see, just as an example, is a naked virgin point of control. But we're not seeing that. When we do see one, then I'll explain it. But to explain it now, if you're not necessarily familiar with volume profile, it's not going to help. What's going to help is the support and resistance that these lines show in conjunction with the Fibonacci's. And then you factor in the 233 MA, and you've got the anchor momentum. And what do you have with all of this? To my way of looking at it, you have the beginnings of a system, of a strategy, of a way to approach price in terms of getting a better handle on where to get in and where to get out, maybe, and where to hold tight. So that's a 30-minute, and that was with the full volume profile applied, and we took away the volume histogram to show the different value area nodes, value-added areas, and the point of controls. So like I said, do me a favor. If it's something that you fully grasp, no need to contact me. But then again, if you feel like making a comment out or writing out a comment, I'll definitely work on addressing it one way or the other. So I make that offer. And my offer still stands about tickers in terms of, whether it be a stock, equity, or a future. Just in the comments, just add in, hey, what about, I don't know, NQ. We're already looking at MNQ, but we could look at NQ too. Or we could look at NVIDIA or Tesla or, I don't know, Apple or Amazon or something totally off the charts in terms of it's not a big deal or it's not one of the big guys. It could be a little guy. In fact, maybe I'll take a look at a little guy right now. Just totally go off script here and take a look-see. It's a little technology. It's not a little technology stock, but it's basically little in comparison to MNQ and NQ and NVIDIA and Apple and, the monsters. So let's see if I can remember the ticker. AMSC, I think. American Superconductor. I believe that's the ticker. And what do we got? We got a little bit of difference. First of all, it doesn't run 24 hours, so it's not going to have as many 30-minute candles as MNQ did. And that's what we're looking at right now. In terms of volume profile, what's interesting is it's showing a projection. It's not showing the original volume profile that this projection would come from. It's just projected over the span of 5 days. So that's something I have to look at. If I'm dealing with, and I know what it may be, actually. And I thank Snoopy Doopy, who's been developing this. I've come up with wacky ideas, and Snoopy Doopy figures out a way to incorporate them into the volume profile, which is really cool. Guy's awesome. We go in, and we double click. Basically, it's the market selector. And we do SPY. Even though this isn't the SPY, I'm thinking that market times are what it needs to be. So we'll say, okay, we'll apply that. And there we go. Now we get the volume profiles. So it's just the right setting. I just had to make sure to put in the right setting. And when we have the low value area, the low value node, the point of control, and the high value area, the high value node, and then the projections out. The high value node for the previous, the previous day, then the point of control for the previous day, both extended out, and then the low value, of course. And these are subsequent ones that follow. So you basically have what? You have volume profiles, and you have support and resistance areas. Sold off here, sold down to the low value node, and it ended the day there. The next morning, gap down. Went below the low value area. Came back in. Next day, gap down. Opened here and rallied back into the volume profile. And it ran high, way up here. And over the course of 30 minutes, It sold back down. The sellers just pushed it back. The bears just pushed it back down. But it still had enough strength to move higher. Now that's volume profile. And here's your 233 EMA over and above. And with today's price action, short squeeze or otherwise, it moved up and over. Came back down, higher low, and it's going higher. The anchor momentum. Showing gap. It doesn't really show the gap downs, but it does show the momentum to the downside. And that's what we're looking at. We get the crossover here. You get basically the red line or the fast line over the green line or the slow line. Then you get a crossover. The red line crosses under the green line. That's the start of the fall. It was chugging upwards. Not a whole hell of a lot of energy to it or momentum to it, but still, that's what it's indicating is up. Comes to a little shooting star candle, if that's what that is. I have to refresh myself on candles. But cross to the downside, and down you come. Came back up, tried to cross back over to the upside and failed. Lower high. And what do we know about lower highs? Uh-oh. The floor drops out. Bam. Floor drops out again. Bam. And that's a hell of a way to fall. And actually, this would be the bam or the bottom as according to the fast line, the red line. But you got the red line headed down, you got the green line headed down. This is coming down. Then you get a little bit of a turn. You get a hammer candle. And what happens? It opens here. The bears push it down. The buyers come back in, push it back up, and finish higher than the open. So it's a reversal. And the next candle follows suit. Up it goes. Then you get a retrace down to a point where it then basically reverses again, and up it goes. So the anchor momentum is basically showing you the price activity and showing you in such a way that you can make kind of, I think, some pretty good informed decisions about where things are headed. Now, you don't know this is the low, but you do know when it crosses to the upside. The one caution is it's way below the zero, not way below, but it's below the zero line. So it has some work to do before it can cross the zero line and really start taking off. But if you're way down here and you don't know how much lower it's going to go and then it starts creeping up, maybe get in, take your first bite on the crossover of the red line over the green line, the fast line over the slow line. And that would be here. And depending on where you place your stop, if you're using stops, put it underneath the low value node maybe. Here, doesn't come down and touches the low value node, low value area, and then moves higher. But if your stop was down here somewhere, you didn't get hit. So you're taking the next ride up. But if it failed the low value node, low value area, and tripped your stop, you're much better off than taking a ride God knows where. Especially off of what would have been potentially a lower high. But alas, it's not, and it moved higher. So you're in basically on the crossover. You stay in because it didn't cross back down on the green. The fast line, the red line, didn't cross down on the green line, the slow line. And then it started moving higher towards the zero line. And with that movement, it moved higher. Basically. I mean, it's still got some work to do, especially since it's under. Now you got the first cross of the zero line by the fast line, the red line, here. And interestingly enough, it was after the gap that filled, and basically the next candle shot like a moon rod. I don't know what I'm trying to say. A rocket, shot like a rocket. That's probably better than moon, whatever I was saying. Anyway. And then the bears come in, just push it right back down. There's enough sellers to do that. If the next candle comes in and it doesn't shoot to the moon, it goes about halfway and then sells. But this buying and selling and all movement is going on here. The red line is continuing to stay over the green line. The red line touches the green line here, which is interesting. So basically, it gapped down, and then based upon the touch and the fact that it didn't break the green line, it basically took off. Not like gangbusters, but it did take off. And you had a hell of a friggin' tail on top of that candle. But it's not showing much down here. So maybe that's a little bit of, I don't know, some sort of unknown activity of some kind. It could very well be that just because this got pushed up so high in a 30-minute span, that the shorts basically said, okay, you can go that high, but we're taking it back down. And they did, but they didn't take the momentum totally away, because the next candle came up about half as much of the moonshot here. Now what's interesting is this crosses without touching back on the point of control, goes a little bit higher, and essentially interacts with the extension, the lower value node extension on this time frame, and fails. Comes back in. And then the next candle going down. So, and you got some of that kind of chop going on with the anchor momentum here. I mean, it's not a perfectly smooth straight line that it's doing here. And that can be its downfall, because in a lot of ways, people get used to certain indicators, like say a MACD is very popular. It tends to have two smooth lines in comparison to this, having a smooth line and then a herky-jerky friggin', significant moving line. So there's that. Now over here, the histogram is showing, and the movement of the red line and the green line are showing that there wasn't much to this move to the upside. So it's naturally going to come down. You didn't necessarily know it was going to hit a lower high, but it's just coming down. It can't just go up all the time. It needs to come down. Build structure. Build structure, build a foundation. You can build a great house on top of it. But I was pointing out the histogram here really doesn't go anywhere. This almost has a little bit more going on than the histogram would show, and that would basically be a negative divergence. So it's ahead of time saying to you, you might want to be careful. You don't know what's going to happen, and you don't. So you continue to ride it, and all of a sudden you're riding down, which brings your profit back here somewhere. So you're kind of losing out on all of this. But that's a pig. A pig wants to get as much as it possibly can. So you have bears, you have bulls, and you have pigs. And it's the old saying, bears make money, bulls make money, pigs get slaughtered. So, trying to think. Did we draw a Fibonacci? No, we didn't. I'm going to draw a Fibonacci on here. And we also have one more thing to look at with volume profile. So I essentially click on the tail on the hammer candle, using that as a swing low, which is actually very close. There it is, basically the low. And what does it do? The gap down comes very close to touching that area or that line. But I think I've said before, support and resistance is all about areas of support and resistance, not lines. So I'm not going to say don't. You do what you have to do. Me, I'm not going to chase around price action, trying to figure things out, and basically have a situation where, this looks as good as this, and this is doing that, and so on and so forth. and it doesn't quite work out. But in this case, it works out kind of nicely, being an example. And that's what I'd hope to provide you with, is some examples and some observations, and hopefully it helps. So let's go add a drawing. What do? We touch the bottom of the candle, right click, add a drawing, and we go up. Percentage, this is Fibonacci retracement, and then Fibonacci extensions. We want the extensions. I click on that. Let's see, we take it from there. We go to a swing high, which is up here, and then we come down to a swing low, which is here. And then what we have is we have a ladder that we can just step through and take the Fibonacci coefficients that aren't working and just take them off. So you clean up the chart a little bit. You don't just have tons of lines going on. But this is pretty interesting. Just looking at how the Fibonacci extensions interacted with the price movement of today. So I'm going to just dial in and see which is which. Actually, I'm going to just leave them all on for the time being, and then we'll dial in and remove the ones that are not necessarily, required. So we get the 0% Fibonacci line down here. That's obvious, because when we drew off this high, we drew to this low. So it went from low to high. Even though this is higher, this actually pushed high into this range. This was selling off from the range. So I tend to look at this as being the swing high, back down to a swing low. So we got swing low, swing high, swing low, and that projects, the swing low is here, I'm sorry. That projects the Fibonacci extensions out to the right. Now you can mess around with these Fibonacci's too. We can right click on it. And why won't it let me access them? Okay. Maybe a little more dainty. Chart scale. Where are the properties? It's going to make a liar out of me. Maybe it's because oh, here we go. Edit properties. So this is what they call the property sheet. And this has all the information related to this particular instance of Fibonacci extensions. And Thinkorswim just puts the name in Fibonacci extension so you know what it is, and then it pens it with a 1. Maybe I don't want to do that. Maybe I want to basically put in the date, or I want to do this, that, or the other thing. Well, this is where you basically would alter the information. Now saying that might not be the best thing to do, because Thinkorswim wants to maintain a certain structure. And if people start introducing their own names and everybody's got a different name they're going to call this, that's going to add in a lot of extra charting, a lot of extra Fibonacci extensions to the mix. And that's not good. Dilution is not good. But anyway, so we got a begin point, an end point, and a middle point. Well, that's what I drew for you before. Just move this out of the way for a sec. We got a begin point, we got a middle point, and we got an end point, and then it projects from there. What else? Basically, these are all the coefficients. I mean, you may be familiar with something like a 61.8 or a 38.2. I mean, in some ways you'd say, oh, that's all Greek to me. Well, it is Greek, but it's basically helping you to understand where the percentages lie when you plot it on a canvas, on a screen. So what can we do? We want to keep in all the coefficients that are all checked off. The rest, we wouldn't even know about because they're not even checked in. But we're focused on this right now. Here's the start of things. 0% return. And at what price? $15.52. It's a little company. It's not that well known. I came across it and was really intrigued by the whole superconductor aspect to it. But anyway, so we come up to the 23.6, which the coefficient shows is 0.236. So that's something to be mindful of if you wanted to add a coefficient in that's not on here. Say, hey, I want to add a curve, and you click on this, and it basically offers you the ability to put in a custom curve. Just remember that big numbers aren't going to work. You got to keep the numbers relatively manageable. Okay, so we move on from that guy, and we move on from this point, and what do we got? Up you go. So we got this big move today, and it was a rip-roaring, short-covering extravaganza. I mean, to see the Dow up, I don't know how many points. I'm thinking I was going to say 2,500, but for some reason, maybe it's higher, but whatever it was like stunning. And the NASDAQ going from, and I'm saying the NASDAQ, there's the mini NASDAQ, there's the E-mini NASDAQ, there's the kindergarten. I mean, she's got her work cut out for her already. I just hope they're not going to assign all sorts of paperwork and homework. But if they did, that would be a good thing too, because you don't want to see just parts of a movie. You want to see the whole thing and get the message if there is one. And maybe just feel a little bit better because it got you out of your body for a little bit. At least that's the way I think of it. Okay. So that's American Superconductor. And I could put in the, just hang in with me. I'm just trying to think this all the way through. We go back to show the histogram. Just see what the difference is compared to the futures, the MNQ. Okay. Apply. Okay. So there's a volume histogram for each one of the days that MNQ was trading. And what do we have? Well, right away I noticed this. We're essentially gapped down and then bought in, pushing it right back up. And where's the gap kick into? Well, if we go to the right, we got another low right here. We got a low here, and this is just a barely infinitesimally small higher low, and off you go. So they're two canine, excuse me, I'm getting just a little tired. I lost my train of thought. Well, time to move on. I just get so used to talking so much that I just stop for a moment. It's kind of like the train goes off the tracks. But we got volume profile. We got the low here. We got just barely higher low here, and off it went. But as it went, it didn't gobble up much volume in order to make the move. It didn't have to work that hard. And then it got up here, and the shorts pushed it back down, but it still took off and started building in some volume. Now there's something to the shape, and I might have talked about this in a prior video. I got to look up the information again because I don't remember the exact breakdown of the various shapes. But this particular shape is like the shape of a P, letter P. And it's all about this quick movement on relatively low volume pushing up, and then the volume building out here around the point of control, basically. And it's just showing a strong move because price didn't have to spend a lot of time in this area to move up significantly. So got that going for us. I showed how to, in case you were interested, how to plot out a Fibonacci extension. We touched on volume profile. We incorporated in the anchor momentum. And here I go again. No wonder why I'm falling asleep. It's getting late. It's getting late in the hour, and I'm at 40 minutes now. I try to do these short ones, and I just get going on this stuff, talking about stuff. And I'd be interested to know how many people who view it, and I appreciate the viewers out there, how many of them bail, after maybe 5 minutes. Like, that's enough. I don't need to see more of that. It can be difficult to watch it all the way through. That's why I wanted to do shorter videos. But anyway, so we're going to take the volume profile back out. And this, in some respects, is a great place to start. Why? You got a 233 to give you 10 trend ideas. You get the Fibonacci projections or extensions to give you an idea of, what's above or what's below in terms of support and resistance. And in fact, I'm going to right click on the Fibonacci, and I'm going to take the 1, coefficient of 1, coefficient of 1.272, and I'm just going to say okay. I'm going to see where they land. Interesting. Very interesting. Came up to 100%, and it's essentially sold off since. It hasn't crossed above. So where's the 127.2? That's your next goal up there. In fact, found support on the 786 here, and what did it do? It moved off of it, didn't touch back here, so that's a potential touchback. But you have other ones. Passed right through here, didn't touch back. Passed through here, started off in such a way that it was coming down just barely, but it didn't touch back. So a lot of this stuff is touchback issues that say that maybe this really expended itself on the short squeeze, but it's going to be coming back. And we'll just have to see where it bases. So maybe I'll just leave this up here right now. It's real clean. That's what I like about it. But you do need some interaction with it. And volume profile is good. I just happen to tuck it away for the time being. I think that the anchor momentum is great. So therefore I'm leaving it. So maybe this will be the working chart to start off with. 30-minute, 5-day 30-minute with a 233 MA, Fibonacci projections or extensions, and the anchor momentum. And the fact that it's a stock, equity, whatever you want to call it. American Semiconductor, AMSC. Now, I didn't just pick this because of the 5-day 30-minute chart. I picked it because you go further out on this. It came from relatively low down, 1175, 1160, whatever, in this area. And look at the friggin' run you got. Oof. And you can play along with the anchor momentum. And in some respects, the red line is responding to all the craziness that's going on as it basically chugs higher. But the green line shows you, up, up, and away. I'm staying in. Across the zero line right here. It's a good place to get in. So I buy initial bite, a couple of shares or whatever. And it rides sideways. You got a little bit of divergence kicking in terms of price charging higher. And the green line is kind of falling behind. But then it got a really strong burst. And what happened? The green line started going up again. Now the red line had a top here, just slightly lower than this here. But you could call it a double top if you wanted to. It would be way out of line. So where does this top take us? That is, to my way of looking at it, the top. In other words, this is the top. Then it retraces, and the push that it makes here is divergent. And that's exactly what this is showing. You got a high here, you got a high up here, you got a lower high here, and you got a higher high here. That's bearish negative divergence. Down it comes. Then you say, oh yeah, sure, you can look at history. Okay, look at history, but in a different way. Let's just grab a little bit of history here and look at what's going on here. You got a shallow retrace here, so you know you're going higher, and sure enough, you do. So let's kick it another candle forward. Actually, it grabs like 2 or 3 at a time. It's the mouse. I need to adjust the sensitivity. Anyway, going higher, going higher. We got the high here, like we showed before. We got a lower high currently here. You don't know for sure that's it, but you do know divergence in terms of this high or higher high. This is high, higher high. And where is it? That's the high. Where's the lower high? Kind of breaks in such a way you don't notice it. I'm just gonna go with this is high and this is lower high. So higher high, this is lower high in relation to this, and this is higher high in relation to that. And that's your divergence. That would be negative because it's essentially forecasting negative pricing to come. And basically it's bearish, and that's it. Divergence. Okay. Boom. Cruising along. First step to the downside. Second step. Now you got a number of stages basically just happening. And then price gets a little crazy. But the whole time it stays above the 233. So if you're a swing, well, maybe not swing, maybe if you're a position trader. You're a position trader, well, then maybe the 233 becomes a nice little trend indicator for you to follow. And so 1 year daily that we got up. Now if I right click, and no, that's not it. Right click and auto zoom. We get the whole year on here. And what it did, it stayed above the green. So you go with it until it collapsed here down to the green and then went lower. And we saw price come up and touch the underside of the 233 on MNQ. But this is AMSC. This is American Semiconductor. This isn't NQ or MNQ. So that's not happening. But what it does comes to a higher low. This is just a grouping that essentially becomes a higher low to up here. And down it comes hard. So I want to keep the lookout for divergence. And look out for different candle formations and so on and so forth. And it takes some time. There's no quick, easy answer to this stuff. It's just requiring a lot of effort, energy, and the ability to soak up information. Okay. Now I just want to go out on American Semiconductor out to the 10-year monthly just to see what's going on. Now this would be fun for somebody who likes to swing trade or range trade or basically just momentum trade. Up, down, up, down, up. So it's gyrating. And it's just about hitting the right areas. So just take a look at the anchor momentum for a moment. You got the crossover below the 0 line. The red line crosses over the green line. But that's a pretty darn good place to get in. And then it pops on the next candle. And up you go. And you got your first higher low. Comes down, retraces to a higher low. It's higher than here. So you got the swing point here. get a subsequent swing point, it survives, higher it goes. Let's look at the other side. We did a rip, I think, didn't we? But this is a 10-year monthly chart. So who's going to follow that? I do, from a historical standpoint, because I'm hoping to learn from this and gather information from this that's going to help me over here. And was it showing already? The monthly trend is down. So once again, my bullish bias gets the best of me. Instead of me saying, screw it, I'm going short, I'm putting my shorts on or whatever, I'm doing whatever, I'm basically about shorting. Be making money as opposed to sitting there and holding a bag. Okay. So I think that's it. That's it for this evening. At 50 minutes, son of a gun. 50 minutes. One more thing, if you monkey around with your charts, let's say I'll just go in here and I'll be like, anchor momentum, I'm going to shut it off, or I'm going to get rid of it. I'm not going to have any indicators. I want to see what's going on. Well, when you're done and you want to add indicators back, but you want your default setup, that's what you do. You just come up here. Where is it? We can do the volume probe, the pane. Just come in here. Nah. How am I doing this? I'm going to select the anchor momentum. And what is it? Just bear with me for a sec. Five-minute volume pro. Well, essentially what I was going to do is refresh the chart. And I'm not seeing what I want to look at. Let's come down and select the grid again. And there we go. Everything's back the way it started out. And we go from there. And if we look on the charts themselves or the studies applied, we see we got the EMA going and we have the anchor momentum going. The others are essentially just put to sleep or on temporary hiatus while you look at things from a very, very simple way of looking at things. So that would be all. And I thank you once again for stopping by. Or I thank you for the first time for stopping by. And I'm just going to keep on cranking out videos, showing different things that I've learned along the way. And maybe it benefits someone out there or some group of people or a few people or many people if I'm lucky enough to grow a channel. And we're all in it together because we're all in it against the institutions and the big outfits that basically take advantage of certain aspects of retail trading. I mean, now they're buying the order flow, which is a whole other thing I'm not going to get into at 52 minutes of video. But I will somewhere along the way. The dark side of order flow. So, all right. Well, you have a good evening, and thanks for stopping by, and I'll talk to you in the next one. All right. Good night.